Absolutely everyone should not do a Roth conversion. That would be like asking everyone to go get surgery. I'll talk to a lot of people who are what I call conversion happy, where it's, yeah, I need to do a Roth conversion because right now I'm at a very healthy tax bracket. I'm working, I'm in my high earning years. In the future, when I'm retired, I'm going to be in a way lower bracket. So why shouldn't I do Roth conversions where when I retire, my income's so much lower? And that way, today I don't want to do them. I'm still working, but when I retire, I'm in a lower bracket. I should do more Roth conversions. I'll say you certainly should consider that. And then they'll go, also, I have these required minimum distributions that are going to come on whether I'd like them to or not. And by the way, those come from your 401k or IRA or SEP IRA, pre-tax money. Now, all of a sudden, boom, your tax bracket's way higher. So what I'll have people come to me and say is, I'm right now in a very healthy tax bracket. I'm going to be very soon in a low tax bracket. Should I convert money when I'm at a low tax bracket and pay 12% or 15% so that in the future I don't pay 25 or 30%? I'll say, absolutely, absolutely. But maybe you shouldn't do any of that at all. And they'll say, why? And I'll say, look at this. So this is an example. I'm going to walk you through the full case study today of someone who wanted to do Roth conversions, who was excited, just like I just showed you in that little funny, silly little example there. And it would have resulted in $243,000 fewer dollars if they actually did Roth conversions. And they were about to do them. They were excited and ready. They had seen a few of my videos where I talked about executing Roth conversions. And now they're like, oh my gosh, I'm so glad we didn't do it. Because a Roth conversion is like surgery. There's times where surgery is really helpful. For a lot of you out there, you've had a surgery and you're like, thank God they exist. But sometimes people will get elective surgeries and it can create further issues. So we don't want to just start there. We want to go through the checklist first before we actually execute a surgery. I'm a certified financial planner who focuses on helping people retire early, and I love tax strategy. Tax strategy is the most overlooked aspect of retirement planning, where I find people are leaving tens of thousands, if not hundreds of thousands of dollars on the table unnecessarily. Now, I'm going to walk you through a case study today, but know that this software that I'm showing you, where you can play around and understand what if you were to fill up this bracket, what if you were to leave, to your kids and they're in the 21% bracket, you can refresh this and you can actually play around with this exact calculator that I'm going to show you today. You can see it's a dynamic moving thing. You move a few different levers here and it changes the plan in a big way. You have access to this. So you can see there's instances where these conversions don't make a lot of sense. There's other instances where they actually can make a lot of sense. And the tricky thing about retirement planning is understanding how to move these levers in a way that can actually be advantageous. And yes, there are times where it can actually result in millions of more dollars, which is why Roth conversions can be a wonderful thing. So if you want access to this, in the description of this video, you will see what's called the Early Retirement Academy. These are custom videos from myself beyond what you've seen on YouTube. They are only exclusive to the Academy, where I'm walking you through how to think about doing a Roth conversion when it makes sense, as well as being able to run your own what-if scenarios for your specific strategy, insurance, estate planning, you name it. Now, let me be very clear. It's a few $100 for a reason. You can see right now it's $299. No one-on-one guidance from me. It's just these custom videos and access to the software. So I don't want you upset at me if you go, hey, you're like, why didn't you call me? I'm not going to be calling you. But in this course specifically, it's because I find a lot of people just want to go run their own scenarios, see what they're on track for, have a little guidance along the way. So I hope you find it helpful. Now, before I can actually show you $2 million, $1 million, 200,000 fewer dollars, you have to understand who the heck we're talking about here. So here's someone who has $1.6 million, 1.2 of it is in a 401k, 400,000 is in a brokerage account. Now he owns his home worth $650,000. He's currently, should I say, 60 and 59 years old, so they want to retire early. No children. So that changes the plan, because let's assume you were to pass away and your child, should I say, is a doctor in California in a very high tax bracket. That changes the conversion analysis, because now if you were to pass away and not convert any money and your child inherits these dollars, they're going to have to pay at their highest marginal bracket on everything you just worked so hard for. So let me explain why conversions can certainly be valuable, but here's what I want you to know first. So here's a couple, 1659. You can see they're the blue. So they have $1.6 million. They're on track for about $4.8 million at age 90. Now, that is assuming they retire at 64 and 63. What if they go, you know what? Nope, we want to be done earlier. We're both going to stop 2 years earlier. And they want to spend $8,000 a month after taxes adjusted for inflation. Yeah, there's going to be fewer dollars, $675,000 fewer dollars, but they're still okay. More than okay. They're still $4.2 million at the end. They don't want to die with $4 million. So once again, what could they do now? Well, their salaries are very healthy today, $240,000, $106,000, and they're saving a lot of money to their brokerage account. Well, they could say, we want to spend even more money. Now they want to spend $10,000 a month. Well, the reason this is important is if they want to spend more money, yes, there's going to be way less at the end, but 2.7 million versus 4.8, it's a big deal, but they're still okay. Once again, why am I showing you this? If we go to the cash flow section, and this is what, if you're in the software, you'll know what I'm talking about. This is going to allow you to understand your retirement. So here you are, pretend this couple retires in 2 years, in 2027. By the way, this is what I love about this software. I just changed in their analysis section that they're going to retire in 2 years. And look, the software just did it. Here they are working, $372 coming in, $375,000 coming in, now $27,000. If I go change this to they work 3 more years, this would also say $378,000. So it will update on every aspect of your retirement plan, which makes this a really effective tool. So you can see here, if they were to retire in 2027, $27,000, that's the income coming in. Where is that coming from? Well, you can see they have a salary that's going to go away. Social Security doesn't start for them until 2032. So they have this other income. What's that? Well, they have rental properties. So that's coming in whether they're working or not. So 27,000 is coming in. 158,000. These are their expenses. This is what they need. And then they're going to be about $12,000 in taxes, which means of 170,000, this is what this couple's going to need if they want to retire and live the life that they dream of. Well, they need 142,000, this number over here under net flows, so that they can spend what they want in retirement. 170 minus the 27,000 coming from rental properties means $142,000 is needed. The reason this is important is if we scroll down here, what column increases here? Do you see this one right here? Plan distributions. Let's fast forward to 2040. If they have Social Security and rental properties, when they're 75, they're going to have $169,000 coming in the door, plus $127,000, which is a required distribution from their 401k, which means $296,000 is coming in the door. Now, they're going to want to spend $226,000. Once again, their expenses adjusted for inflation over time, and taxes will be about $60,000 on the year, which means there will be about $10,000 extra. All the extra gets taxed at your highest marginal bracket. So it's not a big deal, $10,000, but this increases over time, $50,000, $60,000, $70,000, $80,000, all taxed at your highest marginal bracket. This is exactly why people think about Roth conversions. If you go to the tax tab and you click, we're going to go to the tax strategies tab, and you click summary, switch it to calibration, what you can see is the blue is them making money and then they retire. So the green is the Roth conversion. And the software is recommending that they do Roth conversions up to the 22% bracket. But this is assuming a 50% terminal tax rate, which stands for, if God forbid they were to pass away, who's going to inherit it and what is the tax bracket that they're going to have to essentially be taxed on. So you can see here, it says this tax rate will reduce the ending balance in tax deferred accounts at the end of the projection. It's the estimated rate heirs would be subject to. That can be a spouse, that can be a child. It's whoever's going to actually inherit these assets. So if 50% got shifted to 20%, that will change the Roth conversion amount in a big way. Now, before we go to this, what I want you to understand here is if you're doing Roth conversions, there are times where it would be better to do nothing, okay? So a lot of people want to do something cool. Oh, Roth conversion, that sounds so cool. I'm going to do a conversion. It's not cool if it's actually better to do nothing. That is not cool. So before you go to Roth conversions, here's what I'm going to need you to do. I'm going to ask you to first dream big in here. So I would go to this person and go, when do you want to stop working? Truly. And they go, I'd love to stop, honestly, next year. I'd go, great, 61. How much would you love to spend? And if they go, honestly, 10,000 a month, I don't know what I would do with that, but 9,000 a month, that's good. My wife, she'd stop working right now, and I'd also cut back my hours. I'd only make $180,000 a year, and I don't want to save as much money because we want to put extra cash in a account before we retire for travel. I'll go, great. Are those all your goals? And if they go, yep, those are the main goals. And by the way, we were, for them, looking at a potential downsize in the future. But for them, if I said, those are all your goals, you're on track for $2.4 million, I'd say, I'm going to need you to dream even bigger. And they'd be like, I just told you all my goals. I go, yep, but I want to make sure we don't miss anything. What about new cars? What about vacations? What about weddings? What about if you want to sell the rental property? What about you name it? So I'd want them to dream even bigger. And then they're like, okay, we've really dreamt. We have a really good sense of what we want to spend in retirement. I'd say, great. Now we can look at the Roth conversion. And the reason I do it that way is if you go to the conversion first, it will often look like it makes a lot of sense. But think about this for a second before you look at my screen. I'm going to make you just look at me for a moment. If you spend less money in retirement, do you think your 401k will grow or decrease? It's going to grow. You're spending less of it. Makes sense. So your 401k is growing, which means your required minimum distribution will be greater. I'm not trying to be that in a little annoying way. Think about like your third grade teacher or 10th grade teacher, And my fiance is a teacher, okay? So she's the one giving me tips on how I can actually educate all of you. But I want to do this in a way that makes sure you understand it. So if you are going to decide that you don't want to spend as much money, what's going to happen is your Roth conversion analysis will look better. So I had a client come to me, and there's a true story, who said, Ari, I really want to travel. I want to take about 5 trips. I want to fly first class. It's what I want to do, but I'm kind of nervous. I said, why? They said, well, you just drew me the most amazing Roth conversion strategy, and it showed I was going to save hundreds of thousands of dollars in taxes. So I really don't want to interrupt that. I said, then I misexplained. And they said, what do you mean? I said, the point in life is not to have the best conversion strategy. The point in life is to live your best possible life. And in light of that, do great tax strategy. So I would rather you take an extra trip if that means we convert less dollars or no dollars because you live the life you wanted to live. That's success. The mistake I see are advisors who will actually go and recommend that someone does not retire early. Keep working, be extra safe. You never know. Okay, yeah, but there's assumptions in life we're never going to know. I could get hit by a car if I go outside. Who knows? So the point here is I don't want you to make the mistake, which I see a lot, of people who just continue to work, continue not spend what they actually want to spend because they want to make sure they're going to be okay. And then all of a sudden they have a big tax bomb that hits them in the future. What I'd rather have you do is take it year by year and go, hey, we're spending more than we thought when we were actually originally were going to retire. We thought it was $8,000 a month. It turns out it's about $10,000 a month, and we're really enjoying it. Great. That means your conversion might be smaller. What if you say you want to retire and spend $10,000 a month, but you actually only end up spending $6,000 a month? What do you think we're going to need to do? More Roth conversions. So for some of you, if all your money is in a 401k and a little bit is in a brokerage account, you're going to likely need to do Roth conversions. The question is not, are you doing surgery, which is a conversion? The question is, are you going through the front of the hip or the back of the hip? What's going to create less scar tissue? How effective are those conversions? Getting very technical about it. For some of you, you just don't need to worry about it. If all your money's in a brokerage account, you should not be concerned about anything I just discussed today. It does not apply to you. And that's part of my job, is to tell you things you don't worry about. Even if it's not my real job, I view that as my job, my duty, if you will, because this is such a big deal. So these Roth conversions, they're powerful. But what I did not talk about today is how if you convert money, how that impacts your healthcare. And when you convert money, how that impacts your Social Security taxation. What I did not talk about is how Roth conversion impacts IRMA surcharges, extra Medicare premiums. All of these different factors continue to rely on one another, which is why I tell people, To do Roth conversions well, or any tax strategy, you want to make sure you at least have a software that you can play around with to understand how to manipulate it, or you're working with an advisor who really can give you high quality financial advice. Now, this is what we do at Root. The big difference here is our tax planning, understanding Roth conversions, tax gain harvesting, withdrawal strategies. These are the big things that really make a difference to someone's retirement. So if you found this helpful, please do let me know. If you learned something, tell me what the heck you learned, because I love making these videos for you. And I want to hear, if you don't mind, who do you plan on retiring early with? Now, that can be your spouse, which will be the answer for many of you. Some of you, it's, hey, I'm single. I'm going to retire early on my own, but I want to take friends on trips. Some of you go, I just want to travel. I want to volunteer. Tell me what you want to do. It's really fun for me to get to read these comments, and I love what I get to do here. That's it for this video. Please like this video if you found it helpful. Make sure to subscribe if you're not already notified of new updates when videos come out, and I'll see you guys next time.